Here's a quick look at the yen as Japan and the US warned of further coordinated action in FX markets. That's after confirming their first joint intervention in 15 years to lift the Japanese currency from a near 4-decade low. President Trump, for his part, earlier said the joint intervention was a signal of Washington's friendship with Tokyo.
We have a good relationship with Japan. We're very strong, very, very strong financially. They are, they have a weakening yen, and they wanted a little bit of help, and we're always there for Japan. Japan's been very good to us, with the exception, of course, of Pearl Harbor.
Bloomberg M Live's macro strategist, Andre De Silva. Andre, great to have you. So this is a really rare move. We haven't seen something like this in, 15 years? Talk to us about the significance, and are we expecting more of it?
Sure. Well, first of all, it kept us busy over the weekend. Nice present for Friday evening. But for this morning, yes, we've got probably another round of intervention. But let's put it in context. It's not necessarily unsurprising, at least today, there's another round of intervention. Why? Because under the IMF rules, there's a 3-day accounting rule suggested to maintain free floating label. It needs to be within 3 days. So no surprise on that. The scale we don't know as yet, but at least on Friday, it was around $53 billion, which is quite decisive. But the most important thing is obviously joint intervention, as you say.
The concern here is that, faster rate hikes may support the yen temporarily, but it will be quite negative for the economy that really hasn't been very strong domestically and organically. So, the economy remains quite structurally vulnerable to the kind of terms of trade shock that could feed through quite quickly.
If we now see dollar-yen with both the US and the Japanese government intervention, if there's a possibility that could actually start to continue to move lower, then I think it puts a lot of pressure on the equities market as people look at the biases within their portfolio and still see that financials exporters bias.
The inflation in Japan is driven by oil prices and the concern over fiscal policy. And that really translates into the rates differential between the U.S. And Japan. That macro backdrop is not getting more favorable for the yen. It's actually going against the yen. So I think against this big backdrop from a macro perspective, the FX policy strategy maybe is more about slowing the pace of yen depreciation rather than really seeking to turn it around from a directional perspective.
What's the talk on the street now in Tokyo this morning? Where do we go from here?
I think we have seen, a lot of volatility in the past, 2 days. From Thursday, MOF, Minister of Finance, Japan came in and intervened. And then on Friday, you have seen the joint intervention between, New York Fed and also Japan, right, MOF. And this morning, dollar yen probably potentially seen another bout of intervention that brought dollar yen, weaker. So yen strengthening 1% versus the dollar. And I think this will continue for the foreseeable future. And I think the signal, in fact, is there, right? You have the Fed coming in, essentially trying to help Japan. And we have even seen, President Trump, tweeting out saying that, he's doing this for, friendship of Japan versus and U.S. And Scott Bessent is the, I think he's mastermind behind a lot of this, right? Trying to push out all the signal. In fact, I think there's a lot of things that is interesting in the market that everyone is looking at now.